Hello, it is the 16th of June 2012. It is a Saturday. Welcome to this weekend silver analysis, multiple time frames. The links to all the charts, and there's 8 different time frames, will be in the more information box, the directory for such, and available for download. You can print off these images if you wish, do what you will with them. Let's get started. This is the uptrend line, and I like to draw parallel trend lines, but the question is, where do I draw the upward one? Do I draw it here with the 1918 high, 1919 high? Not really. I guess maybe it might be this one, but we don't know that yet. For now, if I connect the high from 1937, 36, it might give you the best looking trend within it, but it's had no problem getting above it here. It's looking like it wants to get above it as well. But overall, this is priced in fiat tenders, legal tenders. And quite frankly, they lose value very easily because of the methodology they use in creating them. So there's no surprise for there to be continuously high prices. 1980, you hit this high. You retested again last year. The more often you test significant resistance or support, the more likely it is that you take it out. The market is in an uptrend because the 18-period average is steeply rising, and it's had a little bit of a consolidation factor, therefore breaking above this high. Well, what does uptrends do? They make higher highs and they make higher lows. Let's shorten this out to the quarterly time frame, which is basically a quarter of this chart. So approximately, you're going to look at this. And let's move it on. This is the quarterly time frame, the uptrend line over the last decade or so. You would have to think this is it right here. And this is a significant trend line because it was the original trend line that got the market moving higher. And when it originally broke out for this 18-period average, it broke above it. It came back to the consolidation average, established its resistance, and when it broke above it, it was good to go. That's key thing for any chart when you see this type of pattern. If you like these 18 average of highs, lows, and closes, I don't know how many sites will allow you to make it look like this. Free stock charts, it will. And this is front-weighted average as well. It's not simple. It's not the EMA. It's a front-weighted average. So back to the trend line. This was the original trend line that got the market going. And from this analysis, it was an area that was support for quite some time, broke down below in here, then was using this area as resistance until it finally broke above it, and it's having a difficult time holding on as of now. You can see signs of the symmetrical triangle breaking down below there. Significant level would be placed in here. The odds this would be support is extremely high. And not only for it to be support, but then to make the higher highs and higher lows for what bull markets do. Now, as far as the significant lows is concerned, you got this low, maybe you want to put one in here, and then you got maybe this one, and then this low here was lower than this one. And then the next low, maybe you got one here, and now we got this low. So therefore, by making another lower low, well, it happened in 2008. It's not the biggest of problems in the world, and sometimes that's exactly what you need for what could be that final washout. Let's move this on from the quarterly to the monthly. So basically, we're going to take a look at 1/3 of this because, quite frankly, there's 3 months and a quarter. So let's take a look at the monthly chart. And within this, you can see better signs of this symmetrical triangle, as well as a breakdown below it. This is the significant support level. The 18 moving average is starting to decline, but again, until it breaks down below this, there's no reason to be concerned. And breaking above this level in here, well, bull markets do what bull markets do. They make higher highs and higher lows. Of course, we already know we've had previous tests of 50. That would increase the chances of taking it out. What would be ideal would be a move up to this 50 level and then find support in this area which we had resistance before finally taking it out. And maybe even supported here, but any support with a higher low, because that's what bull markets do. Higher highs, higher lows. I've said that quite a bit, but it's pretty much the basic part of chart analysis. Let's move on from the monthly to the weekly, and there's approximately 4 weeks in a month, so we're going to take a look at a quarter of this chart again, which means we'll see the symmetric or the descending triangle very well. So here's the weekly chart, and as far as this descending triangle is concerned, perfect hits within this level. The support line is this Fibonacci support at 26 and a third. And Fibonacci's been extremely successful, or it's been wow at how well it's worked out, because you had two tests of this support level, and it established what was a lower high to this high. Increased chances you take it out, and it did, and it was a fast move to the next level, which found resistance where it was supposed to. Increased chances it takes this out, but it didn't. Increased chances it takes this out, but it didn't. Increased chances it takes this out, as of yet, it has not. Which means when you keep on finding the same tops and bottoms, markets become neutral. It's very common for the 18 average to go above and below, although for the most part it's been below. And until, of course, it can really significantly break down by the low or significantly break out the high, it's going to stay in this neutral setup. As far as the candles are concerned, let's look at the last 5. Straight. In fact, the last 5 have pretty much closed exactly where it did before. Let's zoom this in 4 times for that matter, too. So now we can see that within this we've had a higher low, a higher low, a higher low, and again a higher low. 4 consecutive weeks with higher lows. And what's interesting is, since this week in here, which is a span of like 10 or 11 weeks, just quickly looking at it, there's only been one higher high, which was in here. So even though there has been 4 consecutive higher lows, within that period there was only one higher high. So quite frankly, even though it's making the higher lows, it still has yet to have this big breakout that people are waiting for. It's a matter of when till it happens, but when that will be, of course, difficult to tell. As far as trend line analysis is concerned, we can draw a trend line that connects this support level. I guess you can even draw one in here, which means you got a symmetrical triangle. It's got to break to one side or another, and looking at this, it's going to have to do it fairly soon. Next thing we're going to do with this weekly time frame is I'm going to show you the same chart except for just the scaling instead. So therefore what we're going to take a look at is roughly 26 and change up to about 30-ish or so. So let's do that now, and there we have it, 26.5 to about 30 and a quarter. So before this, in 2010, before October, prices were below 26.50, areas that I had not seen since 1980. And then it broke free, found support after coming up towards in here, and then obviously do what bull markets do, make higher highs. And it managed to make it up to 50, of course, and well, test 2, it bounced back up pretty quickly. That's what happens when you fall from 40 to 26 in a matter of 2 days. It's going to do that quite frequently. And then the second time, well, not as quick going down and not as fast going up. Third time, not as fast going down, not as fast going up. Let's move this on now to the daily chart. Each one of these candles representing a full day's worth of data. Let's draw a trend line again. So there we have it. This is a trend for the downtrend. We can see again, this is the support level, which gives us about 3 or 4 days, 5 days until this thing will reach its complexion point in here. And as far as the significant moving average is concerned, when you're in a downtrend, which this was, and you break above it, what you need to do is get this thing to flatten out or stay within the bands, which it did, then break out, and then come back and find support. But when it came back and found support, it has been doing that and staying in the support band now for the last 6 days. So until it breaks above this level here, this thing is not going to be ready to get going. And if it doesn't break above there and it goes lower or even makes a lower high somewhere in here before breaking down, then this will give us evidence for this to be that failed breakout. And very oftenly, when you have a failed breakout, you have a fast move to the downside. The opposite can be true with a failed breakdown for a big move up. So that's something to look for, but until this thing breaks down below these key levels, it's not in that situation as of yet. Let's move this down from the daily chart to the 5-hour chart. Each candle represents 5 hours worth of data. And here we have this little break that occurred, that possible failed breakout, as I'm stating. And then it comes back and it finds key support at the 61.8% Fibonacci retracement level. And obviously from this point, it's been making this, again, a symmetrical triangle. Very difficult to say too much within this, even though it's stabilizing well at this 2/3 Fibonacci. Very choppy, to say the least. So the same is probably going to be true about the hourly chart, which it kind of is. In fact, it's staying within both of these bands, which is the neutrality band. And when you make a significant high, significant low, well, what are you going to do next? Well, it's just doing absolutely nothing. Let's move this on to the hourly and the final time frame. In fact, that was the hour. Did I miss the 5-hour? No, we're done. We are done. Now, what's interesting here is notice that you make this high and this low. And quite frankly, it's still doing a whole bunch of nothing. So all the short term doesn't mean too much. So when we look back at the weekly time frame again, not much is going to go on unless it breaks down below 25 or breaks out above 38. So for a while, it's just a whole bunch of nonsense that will be moving on. And I'd like to thank you for tuning in, and have yourself a great weekend. Bye-bye.